Hello, welcome back. I'm going to explain how to use a top-down analysis with time frames in order to narrow down very precise entries for trades. We're going to go through the 3 monthly, a monthly, weekly, daily, hourly, down even to the minute. And towards the end of this video, I'll show you an actual trade I took using this exact technique. So here we are with Ethereum on the 3 monthly. We can see this goes way back to 2016. There's not that many candles because it's a 3 monthly. So we don't need to check this too often because we already know what's happening as far as where it generally is. But we can see right now, past 1, 2, 3 months, Ethereum's been in this range. It's a 3 monthly range. We go down to the 1 month, we get a little bit more of a picture. We can see how it's gone up here, the last bull run, come down, consolidated. And here's that 3 months range broken down into 1 months, right? So this is 12 months here. And what we can see is that we're still in a bullish monthly direction. Even though we got a sweep here, I don't count this as bearish on the monthly until we close candle body below this wick, these wicks here. So we can see on the monthly, we're in that range. We're at the towards the bottom of the range down here. So now we can go on to the weekly, and it gives us more of a picture. We can see this period of consolidation, expansion, and now we're back here after this sweep of all these weekly lows. Except we didn't come quite down far enough to get that one. Check out the 3-day. It's always a good level to take a look at for kind of medium frame, time frame look. And we can see that, last 3 days it's been pushing up here after this sweep of these levels. So we can see potentially this candle is being bought up. There's still 19 hours left. Could do anything in the next 19 hours, but it's looking like potentially we're starting to push up. So we'll go down to the daily. Each candle is 1 day, and it gives us even more clear of a picture. We can see, yes, indeed, the daily candles are bullish. They're making higher after they've come down with a sweep. They've made a higher high, higher low, and a higher low is confirmed by another higher high. So we're still waiting to see if that happens. Another level I like to use is the 12-hour. So we can see we're in this quite a big 12-hour consolidation, and we've got a range low down here. It was just touched here. We've got this long wick to the bottom, and we're pushing up. We're looking for a trade. Where are we going to get into this, right? And here's a trade, as mentioned at the start of the video, that I took, and here's how I got into it, by looking at the time frames. So we've got the 12-hour here. There's a 12-hour sweep in here. As this came down, I knew there were stops underneath here and here. I believe it also swept this level too, right? So you can have these levels marked out on your chart, and if price comes down, you could be like, okay, it's coming down to this level. We're on the 12-hour. Let's go down to the 4-hour and see what that looks like. Same chart, just on the 4-hour, right? So where do we get in with a trade entry? Well, we got to zoom in closer. Unless you want to take more of a swing trade, but for this purposes, how I took the trade, I will show you how I zoomed in. I saw price coming down here. I saw it sweep this area and close below on the 1-hour. And I just watched. I watched for some bullish kind of price action or some shift in market structure, and there wasn't really much happening, and this kept going down. So when it took out this level, the next level of liquidity would be past here, down here. So I was thinking, along with a couple other reasons, there's an order block here that this tapped into, gave me more confluence. But back to the time frames, what did I do? I went down to the 15-minute, and that gives you even more of a picture. You can see the sweep of this higher time frame, 12-hour level, and that's what we want to look for when we take trades, is high time frame levels. So we've got this 12-hour level, and we're now down on the 15-minute time frame. So I was watching this, and you know, price came down, it's starting to get bought up. You start to see these SFPs. Market structure was broken here. So when I saw this, I thought, okay, you know, it was looking kind of bullish here, like it was getting bought up. And here I said, okay, we've got a 15-minute break of market structure at a higher time frame level where stops have been run here, and I was expecting market structure to shift. So this has been my plan from before, and now I'm narrowing it down into a 15-minute time frame. I've gone from the 12-hour, actually the daily, down to the 12-hour, down to the 4-hour, down to the 1-hour. Now I'm at 15-minute, and I'm looking for, what am I going to do here? I want an entry. So I saw this, I marked out this 15-minute bullish order block. It's a down candle before price moved up, although it didn't break market structure here. It did here, so, but it's still an area of interest. From here, I went down to the 5-minute with even more market structure that we can see because price is fractional, and this is down to the 5 minutes, so every 3 candles equals a 15-minute candle. Now this is a 5-minute order block. So this is a down candle that caused an up move that broke market structure here. It got retraced into, and then market structure broke again. So on the 15-minute and the 5-minute, I could see market structure was shifting, and like I said, it was in a larger time frame, higher time frame area where I was expecting something like this to happen. So as I mentioned, I had the 15-minute order block marked out. When price came down into here and got bought up, that was my reason to get long. It was kind of an aggressive entry, but it's 1R, so I'm willing to lose 1R in a trade. You put your stop there, and you target the next high, take some profit off here potentially, but then you zoom out. You also use the time frames to find out where to exit the trade and where to put your stop. So I already know my stop's good down here. Where am I going to exit? Well, I'm on the 5-minute chart. I want to go out to the 1-hour chart and see what this looks like. All this 5-minute market structure is basically just 4 bars, 4 candles, and there's a good high here. And what happened was that this trade hit my target, and because I was able to get such a precise entry down here, look at that, 5.5R trade. So trading, you want your entries to be as good as they can, and you want the profit to be as much as it can. So with a more precise entry, it allows you to get better RR. And over, say, you know, even if you get 5% better entries, 5% better in price, you know, over 10 trades, that adds up, and your P&L is going to increase faster. So you want to get the best entries you can, and you want to be patient. If we go to the 4-hour, we can say that, okay, there's liquidity up here, but not too far away. There's also liquidity here, here, and potentially even there. So you could extend this up here and just watch, and we might even hit that. Hopefully it works for you. Hopefully it helps your trading. Think of it as a sniper. You have the area, a larger time frame area, and you want to drill down and get the very best entry that you can to increase your RR and potential profit. So I hope that's helpful in your trading. I hope that gives you a better idea of how to use time frames. And if there's any questions or anything like that, please leave a comment, and I'll do my best to clarify anything that needs clarifying. Hey guys, thanks for watching. Please hit the subscribe button, give us a like, and notifications as well for your next videos.